Complexity is the enemy of execution. That is Occam's razor in a nutshell. In other words, keep things as simple as possible. Einstein added to that and said, but not any simpler. We break down the charts, the market, the ability to watch the ebb and flow of money coming in and out of the market. Some people call it greed and fear. We call it your own virtual printing press, which is what we are helping you learn to create. We use very simple charts, but extremely accurate charts using things like the price percent oscillator, the derivative oscillator, the Heikin-Ashi candlesticks, Bollinger Bands. We keep it simple but effective. That's what we train for every day. We try to make money in the market on a daily, weekly basis. And also, what are we preparing for? We are preparing for the market crash that is on the way. When is it going to be? Well, folks like Jim Rogers, as I've been repeating, George Soros' first partner in the quantum fund who knows how to make money and understands markets, up 4,500% when the market went up 45%. So he knows how to make money, understands how the world works, and is sure that there is going to be a systemic market crash, thinks it's already actually starting in places like Venezuela, like Turkey, like Australia, but going to be one 12 months, outside 24 months. Regardless, we're going to make money in the meantime. And when we say that here on the channel, we're not a stock calling service, we're an education firm. I want you to practice with us day in and day out, learning how to read these charts. You get good at it, and then and only then do you combine what we teach you and all the other knowledge you have and the expertise you've developed, and then you can figure out what you want to do with your money. You can go to Vegas and blow all of it, or you can use our trend following techniques with the other knowledge you have and protect yourself, protect your family, give yourself early retirement choice. All those decisions can be yours if you can read stock charts. So let's jump in. We see stocks are down for the day. Bonds are up. Gold is down. Let's jump into the S&P 500. What do we see going on at a quick glance? Oh, special training also. A special training that we have. It'll be in the show notes if you're a subscriber. It'll be in your show notes today in the email that you received. So look in there. If you're not a subscriber, go to chartingwealth.com, sign up. It'll be in tomorrow's show notes, but it is on it's a great training that teaches you very important things about what to do every Wednesday. I'll leave it at that, but it can change everything you understand about the market on a weekly basis to help you pegged into what's really, really going on. So sign up at chartingwealth.com. Also, please subscribe if you've not already done so to our YouTube channel. That helps us a lot too. What do we see happening? Well, we see some weakening on the SPY, the S&P 500, on the price percent oscillator. It's weakening for the week. We can see it pushing just a little higher this week than it had the prior week. The derivative oscillator's losing some energy too. We go from the weekly to the 2-day chart. What do we see there? Well, we see things again trying to push higher and pushing just a little bit higher. Derivative oscillator, however, continuing to lose energy, and that price percent oscillator looks like it's pushing through, crossing over, going down. Now, why is that happening? Well, it is showing us the inherent weakness as far as the moving average convergence, divergence on a percentage basis. Does that help you with anything? No. It's a complicated mathematical formula, but it basically shows you that the price is starting to falter and there is a problem underway. So what do we do with that knowledge? Well, if we were in a trade on the S&P 500, we would definitely be looking at a profit-taking opportunity. We are not at this point because we've not had a jumping in point lately. We go to the 4-hour chart, and of course, that's where you see what's really pulling things over up in the morning and then a hammer over in the afternoon with a big red spinning top, meaning indecision tending down, derivative oscillator gone big negative, price percent oscillator also popped over negative. So that tells us some real problems that we're looking at there on the S&P. So again, we'll wait and see how things sort themselves out. Don't have to get in too much trouble, too much worried about it, because we weren't in a trade there. Now we go to the Qs. That is the Nasdaq 100. What do we see going on there? Well, we see some weakness also in the price percent oscillator, first time in about 4 weeks. Derivative oscillator also losing momentum, first time in many weeks, about 5 or 6 weeks. We can see that our candlestick wick is barely moving up to where it was the prior week, so there's definite weakening there on the weekly chart. We go to the 2-day chart. What do we see there? Well, we can tell that we indeed, at the close of this latest 2-day candle, have a red spinning top, means indecision tending down. It's not crossed over going down, but it's getting pretty darn close. Derivative oscillators lost a lot of energy. Also, we go to the 4-hour chart. What do we see there? We see a sideways slide underway, a red spinning top. After an up morning, things really blew off in the afternoon. Derivative oscillator has really spiked going down, and the price percent oscillator is also turned over going down. So again, lots of downward pressure on the Qs. Now, we've done very well on the Qs trade. Oh, I do apologize. I am traveling, and for some reason, I don't have a strong enough signal that it did not upload all of my various trend lines. So I don't have that analysis to give you right now. Those are always on the chart. Sometimes when you have a weak Wi-Fi signal, and I'm using my phone as a hotspot, sitting in a motor vehicle off the side of the road doing this, I don't have that information loading up to you, so I am sorry, can't give you what's going on with the trend lines. You can see those on your own charts, though. And don't forget, we have these charts available for you. Look in your show notes. You will see a link to the layout that we actually use at freestockcharts.com. If you want to get real serious, got a $25 discount for you if you subscribe to what I believe is the absolute best charting service there is, TC2000, the paid version of freestockcharts.com. So we see, again, lots of weakening in the Qs. We have had a great run in the Qs, of course, and again, jumping in somewhere around 181 with a high up around the 191, 92 levels. So very nice bump ups that we have seen. It has been very good to us during this run. You can sure take your profit in your practice trade when you see fit. Okay, we're going to go from the weekly. And again, we may have an opportunity to jump back in the Qs or the S&P 500 if things turn back around. But don't forget, we could be heading towards some type of summer low. We'll just wait and see. We're not calling anything like that. The charts aren't telling us that. We're just watching what's going on and letting the trends lead us. Okay, we go to bonds. What are bonds doing? Well, when stocks go down, bonds typically go up because they're a safe haven where money goes when stocks aren't doing well. Stocks are both our charts, our indexes are down for the day. Consequently, as one would typically expect or hope for if things are going the way that they should go, we see bonds are up for the day 0.20%. And of course, we see the weekly candle being drawn with a green spinning top so far, still in a confirmed up move since bonds crossed over going up way back on the 30th of November of last year. Keep expecting them to cross over going down, but they just won't do it. We go to the 2-day chart. What do we see there? Well, the 2-day chart's still down. Now, again, 3 up candles. We'll see if there's going to be enough movement at some point to cross over going up. If indeed that occurs, that will put us in the territory to start looking for entry points to jump into an up move. Hasn't happened yet. What do we see on the 4-hour chart? Well, of course, 2 days of nice, strong up movement. 4-hour charts also positive, having crossed over back on the 23rd of March. Derivative oscillator gaining a little bit of upward energy. Price percent oscillator heading up. So we'll continue to wait and watch and see how bonds sort themselves out, since the 2-day is still confirmed down and the weekly is confirmed up. So we'll see how and when a crossover occurs, or when the 2-day moves in the same direction as the weekly. Let's move on to gold. What do we see going on gold? Well, we had that weekly vertical crossover back on Friday the 29th of March, and we have seen movement going down since then. We had the week following, strong down movement, then sort of a sideways slide, and these last 3 weeks are 3 red down candles so far this week. Price percent oscillator heading down, derivative oscillator about flat. We go from the weekly, oh, and by the way, gold was down for the day, which is what we're looking for it to do. We look at what's going on the 2-day chart. Derivative oscillator still losing downward momentum. Price percent oscillator is heading down. It was flat before. We have a doji, which means lots of indecision, tending down after an up 2-day candle previously. And then we go to the 4-hour chart, and what do we see there? 4-hour chart had actually been moving up since it crossed over going up back on the morning of the 24th and went up for a few days and then sideways over the last 3 days and then down in the afternoon of today. And we see the derivative oscillators losing momentum. Price percent oscillator might be getting ready to head down, hit a low point somewhere in the afternoon around 120.18. So we'll just see if gold's going to continue its march down. Of course, I know several of you are shorting gold at this time in your practice trades, and we'll continue to see how long that moves. Just keep your eye on things. If things start bouncing around, you've already gotten an up move, a significant up move on that 4-hour chart. We'll see if things can penetrate down, pound on the door, and move below the 119 mark. That would be very interesting if indeed gold did that. Again, our weekly chart still strong down, and our 2-day chart is actually stronger down than it was the prior day, but isn't flying down in any way like it was previously at some times in the recent past. So we'll continue to watch. Again, there's real indecision on this latest 2-day candle. We'll see how things move. Folks, that's where we are at the end of the day. If you've not purchased our book, we have the 9th printing ready to go out to you, your own autographed copy, Charting Your Way to Wealth. If you want to understand what it is we do here, we're proud of what we do and bring to you every day. You want to get the lowdown on it and understand just what we're up to in a very concise, well-written book that I wrote myself and am very proud of. Please look in your show notes, depending on where you are listening or watching, at iTunes, at YouTube. If you're a subscriber to our daily review, which is for free at chartingwealth.com, you'll see a link in the show notes to purchase the book. Please do that. We would love to get you your own copy. And also, if you want to support us as a Patreon supporter, that's appreciated too. Be sure to hit the subscribe button on the far right-hand side of your screen if you're watching the video. Those metrics help us a lot at YouTube. God bless, my friends. Don't forget about that special training that's in the show notes today. God bless. All the best from the whole team here at Charting Wealth World Headquarters.